Yes, people. So now we will do the third head of income, that is the profits and gains of business or profession. The lengthiest head and the most important head. So when the question on total income is asked, the main target would be on this head, guys. So let us understand one by one. Section 28 being the charging section under the head PGBP specify any profits and gains of business or profession which was carried on by the assessee at any time during the previous year is taxable under this head, guys. Business need not be carried on throughout the year. Even if it is carried on for 3 months, 6 months, 9 months during the previous year, whatever is earned by the assessee during that period will be taxable under the head PGB. For example, I was doing the business till 30th September, I have closed it down. Now in the assessment year, I don't have any business or I have not carried on till 31st March of previous year. Can I take a protection telling anyway in the assessment year I don't have any business so I need not pay tax? No, no, no. Whatever I have earned from my business for any period during the previous year, I have to pay tax on it. Now coming to section 29, which gives the computation of the income under the head PGBP, the format. How do we compute it? I have just made one simple format here, guys. Let me explain each of them one by one. You will take the profit as per P&L account or P&L statement. See, in taxation and all, they never use the word P&L statement. Even though the associate is company, they don't use the word P&L statement and all. They may use it as P&L account itself. Okay, sir. Whatever profit is derived in accounts as per P&L account, we will take it as a base. But we are not blindly accepting it. We will make certain adjustments for that in order to derive what is the income under the head tax, under the head PGBP in taxation. Okay, sir. What are those adjustments one by one? Before that, guys, let us assume some scenarios. Guys, assume we have a P&L account. We have a P&L account. This is as per accounts, okay? There are few expenses debited. There are few income credited. Ultimately, we have got a net profit of 10 lakh. Ultimately, we have got a net profit of 10 lakh. Now, for taxation, what are we doing, sir? We are taking net profit as per P&L account as a base, and make necessary adjustment. Few things we have to add, few things we have to deduct. Okay, so what are those one by one? First item, expenses or losses disallowed but debited in P&L account. Guys, assume there is an expenses which is debited here for 3 lakh. But as per income tax law, it is disallowed. Sir, how will I know? After learning the provisions, you will know what is disallowed. What is disallowed? So in accounts, in accounts there is no concept of allowed or disallowed under anything you incur for business, you debit it. Okay. So somewhere in some provisions they have given this expenditure is disallowed under income tax law. Guys, because of this, my profit has gone down or gone up? Gone down because we have debited it all. If there was no 3 lakh, then my profit would have been 13 lakh. But now it is only 10 lakh. So what should I do now? Add 3 lakh. Add 3 lakh. Yes, sir. Next. Incomes taxable as business income but not credited. Sir, there is one income which is not credited here. Not credited here. But as per income tax law, it is taxable. For example, bad debt recovered. As per section 41, they clearly told it is taxable. But here they're telling, no, it is not credited in accounts. So what should I do? Add it up. Add it up. So assume it is 50,000. If it was already credited, my profit would have gone up by another 50,000. But have they credited? No, they are not credited. So what should you do now? Add it up. Add it up. Okay. Next, expenses in excess of allowed amount debited in P&L account. Some excess debit is given. For example, guys, there is an expenses which is debited in P&L account 5 lakh. But as per income tax law, only 4 lakh is allowed. 1 lakh is unreasonable. 1 lakh is unreasonable. So section 48 tells unreasonable payments are disallowed. Unreasonable payments to relatives or associated concern is disallowed. Okay. Now, actually as per income tax law, what is the expenditure? 4 lakh. But how much is debited? 5 lakh. Extra 1 lakh debit? Yes, sir. Because of it, your profit has gone down or gone up? Gone down. By excess of how much? 1 lakh. So what do you do? Add 1. Add 1 lakh. So addition item we taken care. Next is we will see what all should be deducted. Okay, so less expenses or losses allowed, but not debited to P&L. No fool will do it, but still because if he is doing it, it is like he's showing more incomes. But so expenses or losses allowed. For example, this normally would have given somewhere in the adjustments tax. Okay, it is allowed as per income tax, but not covered above or not debited above. So somewhere in the adjustment they are told 1.5 lakh expenses, which is allowed as per income tax law, but not debited. What will you do? Deduct. Because if it was debited, your profit would have come down. But now you are not done anything. So what do you do? What do you do now? Reduce. Reduce 1.5 lakh. Yes. Next. Incomes not taxable as business income, but credited to P&L account. Guys, in accounts, there is no concept of heads of income and all. Clear? Any income, you just credit it to P&L account. Whether it is rental income, whether it is dividend income, interest income, or if there is any property sold on that, if there are any profit on sale of assets, everything you will credit. But in income tax law, all this are not taxable under the head PGBP. It is taxable elsewhere. It is taxable elsewhere. So what should I do now? Because of this, my profit has gone up. What should I do now? Deduct it. Assume it is 2.2 lakh. What should I do now? Deduct 2.2 lakh. Because already my income has shoot up. Because there is some incomes which are already credited, which is not taxable under the head PGBP, under income tax law. It is taxable elsewhere. So while computing the income under that head, I will consider this. But now what should I do? Throw it out. That is remove it by deducting. Okay, so next. Incomes exempt from tax but credited in P&L account. In accounts and all, there is no concept of exemption. Sir, agriculture income I had, they are credited here. Okay, good. In accounts, okay. Assume it is like 1.8 lakh, which has increased my profit by 1.8 lakh. But in taxation, they're telling it is exempt. So if there is anything exempt under section 10(1), agriculture income is exempt, what do you do? Reduce it. How much is that? 1.8. So if any income which is credited to P&L account as per accounts, but if it is exempt under income tax law under section 10 clause anything, you have to deduct it. So remaining amount will become taxable business income, guys. Taxable business income. Got it? This is just a format. And here we have discussed, sir, allowed, disallowed, what is it and all. We will see. List are there. List is there, guys. Chalo. So what expenses are allowed under income tax law is covered from section 30, guys. 28 is charging section, 29 is format of computation income under the head PGBP. From 30, it is what? The allowability. Allowability. That is what expenses can be claimed. Yes, sir. Expenses of business premises. Business premises here is nothing but the building where the business are carried on, guys. It might be factory building or office building. But whatever expenses are covered under section 30 as well as 31 is only revenue expenditure. Sir, what if it is capital? On that you will claim depreciation under section 32. Whatever is covered in section 30 and 31 is specifically only revenue expenditure, guys. Oh, section 30. Deduction is allowed in respect of rent, rates, current repairs and insurance for buildings that are used for business or profession by the assessee. Sir, what if it is used for personal purpose? No deduction there. Next, expenses on business assets, that is other than business premises, like machinery, furniture, all those things are covered here. Again, revenue only. This section allows deduction in respect of expenses on current repairs and insurance of plant and machinery, furniture used for business or profession of the assessee. This condition is same for both. Only for business assets, the assets which are used for the business or the premises used for business can be claimed as deduction. Only revenue items. Sir, what if I have purchased the building, machinery, furniture? You capitalize it, add it to the block, claim depreciation under section 32. Claim depreciation under section 32. Now getting to section 32, important section. This section provides for compulsory deduction on account of depreciation. Everyone should compulsorily follow it. Sir, optional. I don't want to claim depreciation. No, it is not optional. So what is the format to calculate depreciation? Guys, everyone has to follow WDP method of depreciation. Everyone except power sector. For power sector, option is given. They can either follow SLM method or WDV method. Under WDV method, the depreciation is claimed on block basis. What is the block, sir? A group of assets with similar nature and same rate of depreciation. Whereas under SLM method, depreciation will be claimed on asset to asset basis. For each and every asset, we will claim the depreciation separately. Okay, sir. Now, how do we calculate the written down value in the block? This calculation will be done for each and every block, guys. A block is nothing but a group of assets. Say I may have hundreds of machinery, hundreds of furniture. Instead of calculating the depreciation individually for each asset, they are told claim it for a group of assets. Claim it for a group of assets. So how do we calculate the value in the block? Opening return down value you will take. For us, what would be the opening return down value? As on 1st April of our previous year. As on 1st April of our previous year. For that, if there is any asset purchased during the year, add it. Asset acquired and put to use for more than 180 days, you can claim even 180. 180 or more, you can claim full depreciation. First, add the value here. Okay, sir. Then for asset acquired and put to use for less than 180 days, add it separately. Why so? C or B point. Where an asset has been acquired and put to use for less than 180 days during the previous year. During our previous year. Then only 50% of the prescribed depreciation shall be allowed. Means whatever is the rate of depreciation, only 50% of that you can claim. 50% is not depreciation rate. If depreciation rate is 15%, you can claim 7.5% of it. This is only for the new asset which is purchased, acquired and put to use during the previous year for less than 180 days. And I have also, you need not worry about days calculation and all. Remember one date which I have given you. This is not given in the law. I have computed and just mentioned it here. If the asset is purchased and put to use for on or after 4th October of previous year, less than 180 days. If it is before that, it is understood. It is more than 180 days. More than 180. In your answer, don't mention 4th October. It is just a shortcut for you to check whether 180 na, more than 180 na. That's all. Okay, sir. Next. Fine, sir. Both the purchases, should I record it separately? Yes, guys. Please record it separately. Then net sale proceeds during the previous year. If any asset is sold, it will go out of the block. Only sale value we have to reduce. And when the asset is sold from the block, we never calculate profit or loss on sale of such asset under the income tax law. In your accounts, you will do it, but not in your taxation. Yes, sir. And even if by chance, if any asset is destroyed and I'm receiving insurance compensation, or else I am putting the asset for scrap, I am getting some scrap value. Sale value includes the scrap value or insurance compensation received, guys. Then I get WDV for the purpose of depreciation. From that claim depreciation under section 32, remaining will become closing WDV. That is as on 31st March of our previous year, which becomes opening for the next year. Guys, one important thing is, if by chance, if this figure is there in your question, WDV for the purpose of depreciation has to be split into two. Has to be split into two. Because for this two, just a minute. For this two, you will claim full depreciation. Whereas on this, only 50%. Now, sir, when WDV for the purpose of depreciation is there, first, what should I consider? This. Remaining will become 100% depreciation. Is that clear? For example, I will put it in number. Listen. Because we follow FIFO basis here if nothing is mentioned in the question. Assume opening return down value was 10 lakh. I have purchased asset 1 lakh here. Year 2 lakh. Sale value is 3 lakh. I have sold the asset. When they are not told from where it is sold, always assume it from opening WDV. Always assume it is from opening WDV, because what I have purchased during the year, I will not normally sell it, guys. Why? I am not in the business of selling fixed assets here. I am in the business of selling goods. Okay. But rarely can it happen? Yes. For example, sir, I purchased it, used it for 2-3 months. I was not comfortable, so I sold it. It can happen. But if question is silent, please assume always the sale is from opening WDV. So, what is the value we will get? 13 minus 3, 10 lakh. 10 lakh we will get. Now, 10 lakh is from where, sir? 10 lakh. First, you have to take 2 lakh, on which you will claim. Assume depreciation rate is 15%. 15% into 50%. 15% into 50%. Then on the remaining 8 lakh, you will claim full 15%. Full 15%. Hope you guys got it. This is only when there is a sale and all, you might get confused. That's why I just mentioned. Coming to the condition to claim depreciation, assessee should be the owner of the asset and such asset should be used for the business or profession of the assessee. Sir, whatever is partly used for business, partly used for personal, only whatever is attributable for business purpose will be allowed. Then second point we already covered. Next, C. If an asset is capable of being used, it is still considered to be put to use. Sir, asset was ready to use. I have never used it during the year. Can I claim depreciation on it? Yes, because it was ready to use. Depreciation will be charged even for passage of time, not only for usage. There is no question of profit or loss on the sale of individual asset. When each individual asset is sold from the block, we never calculate profit or loss on the sale of such asset, guys. Yes, sir. Next. All assets, this is done. F. Only when depreciation under section 32 fails, capital gains will take over under section 50. Guys, whenever section 32 fails, immediately we will compute short-term capital gain or short-term capital loss under section 50 under capital gains head. Now, sir, when section 32 will fail? When all the assets in the block are sold, irrespective of the value. Irrespective of the value, or when there is no value in the block. When there is no value in the block, for example, here, sir, all these assets I have sold for, one second, all this asset I have sold for, assume guys I had 20 assets totally, all this put together 20 assets I had totally, all this I have sold for 15 lakh. 15 lakh. So WDV for the purpose of depreciation is negative. It can never be negative. I cannot claim depreciation on negative value. So there is no value in the block to claim depreciation. WDV for the purpose of depreciation is negative or nil. So I cannot claim depreciation. Hence, depreciation under section 32 fails. Immediately section 50 will take over. Section 50 we will learn under the head capital gains. Next, only for the new plant and machinery which is installed in the factory for the assessee who is engaged in manufacturing, over and above 15% depreciation. Normal depreciation rate on plant and machinery is 15%. Over and above that, only in the first year, you can claim 20%. You can claim 20% only in the first year. So in the first year, you can claim 15 plus 20%. Only if new plant and machinery is installed in the factory. By whom? Manufacturer. Okay. But here plant and machinery will not include ship and aircraft cars. Okay. Now, sir, what is the depreciation rate? You told depreciation rate is as per the income tax rules, as per that is under WDV method. What are those rates? It is given in income tax rules. What are those? One by one. There are mainly two category of assets, guys: tangible and intangible. Under tangible, building, furniture, and plant and machinery subcategory. So, under tangible, building. If building is used for residential purpose, 5% depreciation. Sir, just few minutes back you told if it is used for personal purpose, no depreciation, no sir. Yes, but here used for business, but for residential purposes. That is, assume employer has purchased a building, has given it for the employees to stay as stock quarters or rent-free accommodation. Can he claim depreciation on it? Yes. Sir, used for personal purpose, no sir. No, no, no. When employees are staying there, I have given them to perform better obviously employees will feel good about the company when we are giving free accommodation for them. So is it considered to be used for personal is it considered to be used for business purpose? Yes, but how much depreciation we can claim here? Only 5%. Next, building other than above, like factory building, office building and all, 10%. In the question, if they have given only building, please go with 10%. Next, furniture and fittings, including electrical fittings, 10%. Plant and machinery, if it is a motor car, motor bus, motor lorries, motor taxis used in the business of running them on hire, means I am letting the vehicles on hire. In that case, as the usage would be more, 30% is the depreciation rate. Then, for motor cars other than used in the business of hire, means companies have purchased it not to let them on hire, but maybe for the transportation of manager or employees or to provide cab facility. Providing cab facility by the company itself is not letting on hire. They're using it for their business. How much depreciation they can claim? 15%. Sir, from travel company has purchased the car. They're letting that on hire for someone else. How much depreciation they can claim? 30%. Next, ship, 20%. Aeroplanes, aero engine, books, 40%. Computer, including computer software, 40%. Plant and machinery, if they simply use the name plant and machinery, apply 15%. Apply 15%, and please be careful, always check enhanced depreciation also. This is only for the new plant and machinery purchased and put to use for during the previous year. Sir, what if this asset is purchased and put to use during the previous year for less than 180 days? Then you can claim only 10% in the current year of the actual cost and remaining 10% in the next year. Remaining 10% in the next year. Observe, because there is one tricky point here. Listen here. Guys, assume I have purchased new plant and machinery during the previous year 24-25. During the previous year 24-25. For how much, sir? 10 lakh. 10 lakh. And I have installed it in factory. Installed it in factory. How much depreciation? Okay, assume I have used for less than 180 days. Everything I am giving. I've used for less than 180 days. Come on, guys. How much normal depreciation I can claim? 10 lakh into 15% into 50%. Okay, now? Yes. Next, additional depreciation, how much can I claim? Over and above normal. 10 lakh into 20% into 50%. Clear? Asset value is 10 lakh. I'm just taking individual asset. It will go to the block and all, but still I am taking one asset in my example. So how much is that? 75,000. 75,000. And here it is 1 lakh. So 175. So it is 825. So what is the WDV of the asset at the end of the year? 825. Come on, guys. Next year. Normal depreciation will be normal calculation. You will claim full on whatever is the WDV. Additional depreciation, how much you will claim? First of all, can I claim additional depreciation next year? Yes. Provision is only in the first year you will claim the additional depreciation. But if you have claimed only 50% of additional depreciation in the first year, can you claim the remaining 50% in the next year? Yes, you can claim. Even though asset might not be new in the next year, but how much you will claim? Additional depreciation. On what value? It is on same 10 lakh, 20%, 50%. Clear? It will come to same 1 lakh. Why I gave this example was some students will take on this, which is wrong. Because 20% what they have told additional depreciation is on actual cost. Actual cost was how much here? 10 lakh. 10 lakh. Next year, normal depreciation will be calculated on what? 825 only. 825 only. On that full 15%. Is that clear? Yes. If they want to ask it tough question and all, they may do like this. That is why I just give a clarity, guys. Okay, sir. Depreciation done. Now going to section 35. In between sections are not a part of your syllabus, guys. Section 35. I have made one chart on section 35. Let us see. If assessee himself is doing research, he can claim both revenue expenditure as well as capital expenditure except land. For land, whatever expenditure he has incurred will not be allowed. If he himself is doing research business, both revenue as well as capital except land will be allowed as deduction. Even if it is incurred 3 years before the commencement of business, it will be allowed in the year of commencement of business. Sir, will every expenditure incurred will be allowed? Capital will be allowed except acquisition of land. Whereas if it is a revenue, only salary for research personnel, excluding perquisite. Perquisite will not be allowed. And cost of raw material. This is only for the expenses incurred 3 years before the commencement of business. Whereas once the business has been commenced, any revenue expenditure will be allowed. Any revenue expenditure will be allowed. Clear? So this restriction is only when it is incurred 3 years prior to the commencement of business, guys. Okay, only salary to research personnel and salary, cost of raw material. Only that is allowed. Once business is commenced, whatever revenue as well as capital expenditure you are incurring in that year, you can claim in the same year. And on the same capital expenditure, again, depreciation is not allowed because you are claiming 100% benefit year itself. Okay, sir. This is one special nature because normally capital expenditure no business can claim, but for scientific they are telling yes, you can claim it. But once you have claimed 100% of the capital expenditure, you cannot claim depreciation on it. Okay, sir. Next, sir, I am not doing any research, but I support research, sir. I am contributing to someone who is doing research, who is approved to do research. Can I claim deduction for it? Yes, you can claim it. How much, sir? 100% of whatever you allowed. Whatever you contribute. Even revenue and capital expenditure, whatever you incur, 100% you can claim as a deduction. But this is not allowed if you are following default regime. If you are doing your own business, allowed. But contribution to others, not allowed. Contribution to allowed, not allowed. But one condition here is, guys, they should be approved. Important. Okay. So section wise, clause wise also I have given you what exactly is covered. 31.1.1 and 31.1.4 talks about your own business. If you have incurred a revenue expenditure for your own business or capital expenditure for your own business except land, you can claim 100% deduction. 100% deduction. Then other sections covers the contribution. 35.1.2 contribution to approved research association, college, institute and university for scientific research. Then 35.1.2a contribution to company, add the word Indian company there specifically, Indian company for scientific research. Then 35.1.3 contribution to approved research association, college, institute and university for social science or statistical research. Last one, 35.2a contribution to national laboratory, IIT for scientific research undertaken under an approved program. For all this contribution, 100% is allowed as deduction, even though it is not related to your business. Now, sir, especially capital expenditure, 100% is allowed. I purchased the asset, claim the expenditure. What if I sell it later? What if I sell it later? If the asset on which the deduction is claimed under section 35 for capital expenditure on scientific research of the assessee is sold, then the tax liability will be as per section 41 subsection 3. Section 41 subsection 3 tells like this, guys. If you have sold it even without using it in your scientific business, purchased, claimed deduction and immediately sold it, you are not even used in your business, straight away the amount of deduction you have claimed or the sale value, whichever is lower, is taxed. Sale value or the amount of deduction which you already claimed under section 35, whichever is lower, is taxable. Next, sir, I purchased it, used it for my scientific business for 2 years, 3 years, 4 years, and then I am selling it, sir. Simple. When you have purchased it, claimed 100% deduction, will you use it for your business? Yes, I am using it, sir. Add the asset to the block. What will be the cost of the asset? Nil. What will be the cost of the asset in the block? Nil. Okay, sir. Now, when asset is sold, you will reduce sale value from the block. Section 32 fails. Why? Because there is no value in the block. So what should we do? Compute short-term capital gain or loss under section 50. Clear? That is, when you have purchased the asset, claimed the deduction, used it for few years and then sold it, you will compute short-term capital gain or loss under section 50. One more important thing, guys. Sir, for claiming depreciation, how do we calculate the cost? Calculation of cost is given in section 43 subsection 1, actual cost. Any cost which you have incurred up to the date the asset is put to use or ready to use, you will capitalize. You will capitalize it. Just a minute, I will show it. It is a part of my regular material. Because if at all, if by chance, if they ask anything regarding this, you have to be careful. I will just read out this. Actual cost, because actual cost we will add it to the block cost. It includes purchase cost, expenses incurred in acquiring the asset like loading, unloading, freight, insurance, installation like technician fees, interest on loan borrowed to acquire the asset up to the date it is put to use. Even after the date asset is put to use, if you are still paying the interest, claim it as revenue expenditure. Claim it as revenue expenditure minus any subsidy or grant given to purchase the asset. To purchase the asset. Important adjustment is GST. Sir, I have purchased the asset for 10 lakh and I have paid 1.8 lakh GST, sir. So totally my cost is 11.8 lakh, sir. So should I capitalize 11.8 lakh or 10 lakh? Question mark. Can you claim ITC on 1.8 lakh? That is input tax credit under the GST law? If yes, claim credit there only, because immediately you will get the benefit. Clear? So in that case, in taxation, how much you will capitalize? 10 lakh. 10 lakh. Now, second scenario. No, sir, for some reason, they have blocked my credit. They have blocked my credit. Assume section 17(5) blocks this. I have purchased motor vehicle where seating capacity is less than 13. I am using it for my business, but still blocked. Still blocked. Where? Where is it given? Section 17(5) of Income Tax Act. GST. CGST Act. Yes, sir. Now when it is blocked there, obviously you cannot claim credit. What will you do? What will you do? No credit for it. So capitalize entire 11.8. In simple, you cannot take both the benefit. Either capitalize GST component here or claim credit there. Or claim credit there, guys. Yes. So 43 subsection 1 has to be in simple for this point especially. Okay. For this we have to refer to section 16 subsection 3. That is what it will talk about. Depreciation. 16 subsection 3 of CGST Act talks about this. Yes. Next. Sir, if I have paid more than 10,000 in cash, can I capitalize it? No. Assume I have purchased asset for 1 lakh by paying cash. What is my actual cost? Nil. How much will I add it to the block? Nil. Hope you guys got it. So there are some surgical strike on cash transaction. One of them, it is this. You cannot pay capital expenditure more than 10,000 in cash to a single person in a single day. If you pay, it is as if you are not paid. It is as if you are not paid, guys. Okay. Next. Capital expenditure of specified business. Scientific, specified and all, they are giving even capital expenditure. But here, guys, 35 covered even revenue expenditure. Whereas 35 AD is covering only capital expenditure. So 35 AD is telling if assessee is doing the following businesses, they have given the list of specified business. If assessee is doing any of this business, he can claim 100% of capital expenditure in the same year. Even if you have incurred capital expenditure prior to commencement of business, claim it fully in the year in which you have commenced the business. 100% except LGF. KGF. You heard me as KGF? No. LGF. Except land, goodwill, and financial instruments. For this three, there is no deductions. Whereas for any other capital expenditure, you can claim 100% deduction in the same year. Special category. Why, sir? Because normally for capital expenditure, section 32 told, I will give depreciation kamanta. But for 35 and 35 AD, what we are learning, 100% I can claim in the same year. That means, can I claim depreciation on it? No. We will add the asset to the block, but at nil value. But at nil value, guys. Okay. Let us see what exactly is given in section 35 AD. Deduction shall be allowed for any capital expenditure other than the acquisition of land, goodwill, and financial instrument. In short, I call them as LGF. Guys, if I have given any shortcut, if I have given any short forms only for learning purpose, don't use them in exams. Clear? Unnecessarily, evaluator will get confused about that. What is this LGF and incurred by an assessee during the previous year of specified business subject to the following certain conditions. Okay, sir. Capital expenditure incurred prior to commencement of specified business shall be allowed as a deduction in the year of commencement. Guys, one important thing. Even under section 35 AD, they allowed it. But only capital expenditure or revenue expenditure incurred 3 years before. But that 3 is not here. Any number of years. Guys, assume I have incurred some capital expenditure for my scientific research business 4 years back. This year I am commencing the business. Can I claim the deduction for it? No. Under section 35, you cannot claim. Because they clearly tell only within 3 years. Whereas for specified business, that time limit is not there. That time limit is not there, guys. And whenever section 35 AD deduction I am claiming, audit of accounts is applicable. I have to appoint a chartered accountant in practice and get the audit report done as per section 44 AB. As per section 44 AB. Section 44 AB talks about what? Audit of books. 44 AA talks about maintenance of books. 44 AB talks about audit of books. Next. Sir, is there any restriction that once I have purchased the asset, claim the deduction? Should I use it for my business? Yes. Minimum for 8 years. Minimum for 8 years. Within 8 years, if I transfer it to my other business, is it taxable, sir? Yes, it is taxable, guys. How is it? I have taken one example here. Let me explain. Just a minute. Yeah. Assume guys. Yeah. Suppose a company purchased plant and machinery for 2 crores for a specified business and claimed deduction under section 3580. 100% they have claimed full 2 crores. However, the very next year, the plant and machinery purchase was put to use for unspecified business. Means that is some other business. So you have taken 100% benefit and then misusing it. Come on. What they will do? In this case, since the machinery has been used for unspecified business, the deduction claimed under section 35 AD will be disallowed. Means it will be taken back. However, the amount of deduction to be disallowed will be reduced by depreciation allowable. What is the total deduction they have claimed, guys? 2 crore. See, if you have claimed 100% deduction, will they give depreciation on it? No. But when you are going back again, they are taxing you this amount. They are telling we will reduce to the extent of depreciation. Because if you have not claimed 35 AD deduction last year, at least you would have claimed depreciation. That much we will give it. How much is that? Assuming 15%, 30 lakh. Additional, I have ignored. Okay, sir. What is the remaining amount? 1,70,000. So this amount is taxable as specified business income as per section 35 AD subsection 7B. It is taxable as what? Specified business income. Because you had claimed this 2 crore expenditure under for which business? Specified business. They are reducing only 30 lakh. Why? If you had not claimed 100% capital expenditure deduction, at least depreciation you would have claimed last year. That much we will reduce it. Remaining is taxable. Now for non-specified business, I am using this asset. Can I claim depreciation for non-specified business? Yes. What is the actual cost for non-specified business? 1 crore 70 lakh. So for non-specified business, we will add this asset to the block at what value, guys? 1 crore 70 lakh. 1 crore 70 lakh. So can I claim depreciation on it under section 32? Yes, for my non-specified business. And this 30 lakh, whatever I reduced was only for 1 year because I used this asset for specified business only for 1 year. Sir, what if I have used it for 3 years? Calculate depreciation for 3 years and reduce it. Remaining amount is taxable as specified business income. Same thing will be allowed as cost for my non-specified business. Okay. Next, the actual cost of the asset, which I already told you guys, will be 1 crore 70 lakh as per my example. Sir, this is when it is used for non-specified business. Sir, what if I have sold the asset only? Then entire sale value will be taxable as business income as per section 28. As per section 28, entire sale value will be taxable as business income. And section 35 AD deduction is not allowed for the assessee who is following default tax regime. Now, sir, if I am following default tax regime, if I am doing specified business, what should I do, sir? Add it to the block, claim depreciation. 35 AD doors are closed for you. 35 AD doors are closed for you. That means you can add the asset to the block, claim depreciation on it. Claim depreciation on it. Now, sir, are we supposed to know what all businesses are covered as specified business? Yes, guys. You should have at least some idea about the list of specified business. I will just display it here. Have a look into it. These are the list of specified businesses. If you are doing any of this, then you are considered to be doing specified business for which for capital expenditure deduction, section 35 AD doors are open. I will proceed further. Just have an idea. You need not mug up also. Just have an idea because in the question, if by chance if they use assessee is doing so and so business, you should know whether it is specified or not. Whether it is specified or not. Yes, guys. Let me proceed further. Next, 35D, which gives deduction for preliminary expenses. The expenditure incurred by the assessee either before the commencement of business or after the commencement, but for extension or expansion of his present business. Then, what is the amount of deduction? It is given for two set of people. If it is other than company, it is given only for a resident. If they are non-resident, they cannot claim it here. How much deduction, sir? Take lower of A or B. What is A? What is B, sir? A is 5% of cost of project. B is actual preliminary expenses. Compare both, take whichever is lower. And it is allowed in 5 equal installment from the year in which business is commenced or from the year in which extension takes place. Next, if it is an Indian company, you know always it will be resident in India. Then what you have to do, guys, first do a year of 5% of cost of project or 5% of capital employed. Take it as A. Take it as A. Compare that with actual preliminary expenses. Take whichever is lower. Take whichever is lower. And 1/5 of that will be allowed as deduction for the first 5 years from the year in which business is commenced or expansion has taken place. Please be careful, only for company they have two, 5% of cost of project or 5% of capital employed, whichever is higher. Compare that with actual preliminary expenses and take whichever is lower. Okay. And for others, please be careful, only if they are resident, deduction is allowed under section 35D for preliminary expenses. Now, so what is this cost of project, capital employed and all? Cost of project means the cost of fixed assets, which is nothing but like fixed asset which we use for long term. Then capital employed refers to what? Issued share capital, which includes both equity as well as preference, plus debentures, plus long-term borrowing. As on what day should I take? Is it as on the date of commencement? No, no. As on the last day of the previous year, in which the business of the company or the expansion takes place. For example, guys, assume the date of commencement or the date of expansion is 15th November 24. We have to take the cost of capital employed as well as the cost of project as on what day? You will close your first balance sheet on what day? 31st March 25. 31st March 25. Your first balance sheet date. First balance sheet date, guys. Okay. Now, whenever you are claiming deduction under section 35D, for you, audit is mandate. Irrespective of your turnover and all, audit is mandatory. Appoint a chartered accountant and get the certified copy, audit report, as per section 44 AB. And you have to submit it 1 month prior to the due date of filing the returns. When audit is applicable, the due date to file returns is 31st October of assessment year. 1 month prior to that means 30th September. Okay. Some special expenses we saw. Now we will see specific expenses which is allowed for any businesses. Okay, because here and all we saw only in special cases it is allowed. Scientific, specified, and even preliminary may not be there always. The following, yes, may be regular expenses, guys. Yes, sir. What are those? I will quickly go through the list, guys. If you just have an idea about all this, it is enough. All the sections, all this are covered under section 36 subsection 1. Insurance premium paid. Premium paid on insurance policy taken to cover the risk of damage or destruction of a stores of the business is allowed as deduction. Next, health insurance premium paid on the health of the employees. Is it allowed? Yes, if it is paid in any mode other than cash. If it is paid in cash, sir, not allowed. Next, bonus or commission. It is allowed as deduction provided it is not paid as profit or dividends, subject to 43B. What is 43B? We will see later. Then interest on borrowed capital. If the loan borrowed is used for the purpose of business, whatever interest is paid is allowed as deduction, subject to 43B. And here, if the loan is taken for the purchase of fixed asset for the business, whatever interest is paid till the date the asset is put to use will be capitalized, added to the cost of the asset to claim depreciation. Any interest paid after the asset is put to use will be claimed as revenue expenditure as per section 36(1). Next, employer contribution to provident and other funds. Will it be allowed as an expenditure? Yes. Allowable in the fund is settled upon a trust which is recognized or approved, and it should be for the benefit of the employees, subject to 43B. Wherever I have given 43B, both 36 also should be satisfied, 43B also should be satisfied. Section 43B will give list of expenses which is to be paid within the due date of filing returns. If you have not paid, no deduction in the current year. Sir, what if I have paid after the due date? Claim it in next year. Yes. Next, employer's contribution to NPS account of the employee. Deduction is allowed, which is 14% of salary amendment. Previously it was 10%, now it has been made as 14%. And here salary includes only basic pay plus DA for DA condition attached. Next, employees contribution to welfare fund. Here one checkmate has been kept to employer. See, how is it? Employees contribution to welfare fund deemed as business income of the employer first and will be allowed as deduction only if the employee contribution have been credited to employee's account on or before the due date of the respective act. Guys, listen here. Now, when normally employee's contribution, employer will deduct from employee's salary and deposit it to the account. Now, when employer has deducted, assume 1 lakh he has deducted employee's contribution during the year 24-25, or else let me take for 1 month. For a month, he has deducted 10,000. Sir, which month? Assume Jan 25. Employer has deducted employee's contribution 10,000. Now, assume it is PF. As per PF Act, guys, it has to be deposited to PF account within 15th February of 15th February 25. That is within 15th of next month. Where is it given? In PF Act. Sir, are we supposed to know PF Act and all? No. Just I am explaining with an example. Now, employer didn't deposit. He deducted 10,000 in January, but didn't deposit it within 15th February to PF account of employee. Then what? Guys, see, when it is deducted, it is income for him. It will be credited to his P&L account. If he deposit within the due date of the fund, he can claim it as an expenditure. If he doesn't deposit it within the due date of the fund, then he cannot claim it. Automatically, it becomes his income. Actually, it is not his income. Just because he is depositing later, he is being penalized for it. Means department is telling indirectly, don't play around with employees' money. Deduct, collect, immediately remit it. Immediately remit it. Don't keep it as your working capital. Don't keep it as your working capital. Or even if you use it, make sure you deposit it within 15th February. 15th of next month. So I gave the example of PF. Let it be any fund for the welfare of employees. If employee contribution is collected by the employer, only if it is deposited within the due date of the respective fund. The due date of the respective fund is not given under the income tax law. It is given under the respective act. If it is only deposited within that due date, you can claim the expenditure here. Sir, for academic purpose, from exam point of view, are we supposed to know what are those due dates and all? No, guys. No. Oh. Next, bad debts. Bad debts written off in the books of accounts is allowed as deduction. Sir, what about the provision for bad and doubtful debts? Not allowed. But it is allowed only for bank and financial institution, but with some restrictions and all, that you need not worry. So normally provision for bad and doubtful debts will not be allowed. Guys, not only provision for bad or doubtful debts, any provision will not be allowed. Any provision will not be allowed. Why, sir? Because this is what something which we are creating for future. This is what we are creating something for future. Yes, sir. Are we? Thank you. Chalo. So, if I am creating any provision for future liability or expenses, can I claim it now? No. When you actually suffer the loss, you can claim it. Don't create any provision now for income tax purpose. Sir, in accounts, will it allowed? Yes. Conservatism concept allows. Prudence concept will allow it. Okay. Don't expect any gain. It will hurt you. You can expect loss. You are already prepared for it. But in taxation, they are telling no. You don't expect anything. Don't expect anything. Oh. Expenses on family planning. If it is capital in nature, then it is allowed in 5 equal installment. If it is revenue in nature, allowed fully. But it is allowed only for corporate associates, guys. Okay, sir. Then STT and CTT, securities transaction tax or commodities transaction tax, if it is paid, it is allowed as an expenditure only if securities or commodities is a stock for you. That is, when you sell it, The sale value, if it is taxable under the head PGBP, only then STT and CTT is allowed as an expenditure. No, sir, this securities or commodities is a capital asset for me. Can I claim deduction for STT or CTT? No, it is not allowed. It is not allowed, guys. Okay. 36 covers some specific expenses, guys. Okay, means they name them. They name what is allowed, what is not allowed. They are actually telling what is allowed. Yes, sir. Then there might be many other expenditure also, like salary, printing and stationery. In the law, can they keep on naming it? No. They told in section 37, we are allowing anything which is not allowed above. From 30 to 36, if you have not claimed anything, but you have that expenditure, if it is incurred for business purpose, not personal in nature, not immoral, not illegal, allowed here. And if it is not disallowed later, all this you have to take care. Listen. Sir, I have incurred some expenditure for my business or profession. Now, I have not claimed it from 30 to 36. It is not disallowed later. It is not disallowed later. It is not personal in nature. It is not immoral. It is not illegal. Can I claim it? Yes. Where? Under section 32. They are not naming it. They are not naming it. They are telling if you satisfy all these conditions, yes, you can claim it. Yes, you can claim it here. Explanations are there. Any expenditure incurred by the assessee for any purpose which is an offence or prohibited by law or to settle proceedings initiated in relation to contravention under such law as may be notified by the central government is not deductible. Is not deductible. Yes. So, for example, sir, I have paid bribe. Can I claim it for my business only, sir? No. Sir, I have paid I have paid some supari. Okay, to kill my competitor or to give warning for my competitor. For business purpose, yes, maybe. Why? Because if he die, my business will improve. Or if I give warning to him, he will become silent. Maybe my business performance will increase. Maybe yes for business, but is it legal? Is it moral? No, not allowed. Not allowed, guys. Next, CSR expenditure also is not allowed because it is not for business purpose. Clear? It is the contribution towards the society. Clear? Section 135 of Companies Act tells if your turnover that this and all, if you cross certain limits, for you see, they told it is voluntary, Papa, when they brought. Now they have made it almost mandatory. If you cross all that limits and if you are covered there, then you have to form CSR committee and contribute to the society. Okay. Yes, and even in company law, they have clearly given for what all purpose you can contribute. Clear? Yes, sir. Now, if I have incurred any amount of expenditure for CSR purpose, can I claim it as business expenditure for income tax law purpose? No, guys, you cannot. Notes. Premium paid on the Keyman insurance policy is allowable as business expenditure. Keyman insurance policy. It is one of the special policy which I will discuss later. So, premium paid on it, is it allowed as an expenditure? Yes. If the payment is for non-compliance of law, is compensatory in nature, it is allowed. If it is penal in nature, not allowed, like penalty and all. See, interest also can be both penal in nature or compensatory in nature. Now, you guys cannot decide whether it is penal in nature or compensatory in nature. They should have given it in the question. But if it is compensatory in nature, allowed. If it is penal in nature, not allowed. If question is silent, assume interest as compensatory and allow it. If they themselves has given as penal in nature, disallow. CSR, I already told you, last one. Any advertisement expenditure in souvenirs of political parties representing contributions for political purposes would be disallowed as per section 37 2b. Okay. Then guys, this point actually nowhere they have given openly in the law, but I have given it here because the following expenditure is actually not allowed under income tax law. What are those, sir? The following expenses is not allowed while computing income under this head. Preference or equity dividend because it is appropriation of profit. Any provision created for future liability or expenses, then transferred to any reserves. So guys, this normally, this especially first and third item, you guys would have taken care in your P&L appropriation account, if you remember. What are those? Appropriation of profit. That is, in income tax, they are very clear. You earn so much profit, pay tax on it. After that, what you do, we don't care. Whether you transfer it to reserve, whether you declare the dividend, it is left to you, sir. Pay tax and do whatever you want. So dividends are transferred to any reserves are not allowed as expenditure under income tax law. Then charitable and political contributions. You cannot claim it as business expenditure But can I claim it as deduction under Chapter 6A? Yes, you can go and claim deductions there. Till now, whatever we have seen is what is allowed. From now, whatever we will see is what is not allowed. We call it as inadmissible expenditure or disallowed expenditure, guys. Yes. Before I start with this, guys, I just want to give some inputs for you with respect to due date of filing the returns and the TDS concept. Let me just touch some part and come back of that. You just aram se listen. I will go and touch and come back. See, this is a part of assessment procedure chapter. Due date for filing the return is given in section 139 subsection 1, guys. There are 3 due dates applicable in 3 different scenarios. If the assessee is engaged in international transaction where he is supposed to furnish transfer pricing report as per section 92E, this is not a part of your intermediate syllabus, transfer pricing and all. But if he is supposed to submit a transfer pricing report, what is the due date applicable for him? 30th November of assessment year. Next, if he is a company or a person whose books of accounts is subject to tax audit, or a working partner of a firm whose books of accounts is subject to tax audit. In simple, a company always and anyone else for whom audit is applicable. What is the due date? 31st October of assessment year. For any other category of assessee, like I have only salary income, rental income, what is the due date for me? 31st July of the assessment. Clear? Why am I doing now is, guys, in PGBP chapter, here and there, they have given reference to due date of filing the returns. Now it is good for you to know what is the due date of filing the returns. See, in the question, if there is no clarity, but you have to answer the question with respect to due date of filing the returns. For PGBP head, you can go with the 31st October. For PGBP head, only if question is silent. Clear? Because you have to decide whether the payment is made within the due date or not and all. If question is silent, what should I take, sir? Which date? 31st July or 31st October or 30th November? Go with 31st October. Or else they would have only given clarity in the question. If they have given clarity, please follow the same guys. Okay, sir. Next, let me touch the concept of TDS also, guys. TDS. TDS. Guys, whenever payer is paying any expenses, he has to check whether what he is paying to the payee, that is the person who has earned the income, is it covered under TDS chapter from section 192 to 195. Sir, 192 to 195, that means only 192, 193, 194, 195. No. 194 series is there. Clear? So if payer has to check whether whatever he is paying, is it covered under any section to deduct TDS? If yes, he has to deduct TDS and give balance to the payee and remit TDS to the government within 7th of next month. Within 7th of next month. What is the standard due date to deposit TDS is 7th of next month. And he should also file quarterly TDS returns with the department. And he should give a certificate to the payee telling how much TDS he has deducted, when did he deposit it to the government. All these details will be given to the payee, based on which payee will claim the credit in his income tax liability. That is from his final tax liability. Can he reduce TDS? Yes, guys. And whenever payee is calculating his income, he should always consider gross income. That is before TDS. Before TDS, guys. Yes, sir. Sir, payer should do all this. It is none of his business actually. It is none of his business. But as income tax provisions are applicable to the payer, if he violates it, he will be treated as assessee in default. And whatever he has paid to the payee, he cannot claim it as an expenditure. He cannot claim it as an expenditure. Where is it given, sir? You can see. Expenses are disallowed under section either 40A1 or 40A1A if TDS provisions are not complied with within the due date. Guys, please observe the change here. What is the due date to deposit TDS? 7th of next month. But in PGBP head, they are telling if you are not deducted TDS or else deducted but not remitted to the government within the due date of filing the returns, you cannot claim that expenditure. You cannot claim that expenditure. 100%, 30%, two things are there. We will see that. Please be careful. The due date to deposit TDS is 7th of next month. But for disallowance under the head PGBP, they are not referring to this due date. They are referring to which due date? Just now I covered. Due date of filing the returns, guys. I know students might get confused. That is why I'm stressing on it. Yes, let us go back to PGBP now. Yes, shall we'll start with 40. Expenses disallowed under section 40 series. Please pay attention one by one. First one, TDS not deducted or else deducted but not remitted to the government within the due date of filing the returns. What is the due date of filing the returns? Under section 139(1), 31st July, 31st October or 30th November, whichever. If question is silent, consider 31st October. Okay. As per section 40A(1), they are telling if the amount is payable outside India or to a non-resident or a foreign company within India, then 100% of the expenditure will be disallowed. Whatever you have paid, entire expenditure will be disallowed. Next, 40A(1)(a) is telling if the expenses is payable to a resident. So who is the payee here? Resident. Then not 100%, only 30% is disallowed because that is the highest tax rate applicable. Na? So they told 30% is disallowed. Now, sir, TDS was not deducted or deducted but not remitted within the due date. You disallowed me the expenditure in the current year. Assume next year within the due date I deposited it. What I was supposed to do this year within the due date, I did it after the due date. Will you allow me back? Yes, whatever was disallowed in the current year will be allowed in the next year. As you have complied in the before the due date, you are not complied it. Later you complied with TDS provisions. They're telling we will allow it in the next year. We will allow it in the next year. What they will allow, whatever is disallowed. Guys, now assume payment was made to, listen, payment was made by payer to payee and payee was resident. How much payment was made? 1 lakh without TDS. Now, under section 40A(1)(a), how much is disallowed? 30,000, 30%, correct? Assume guys, after the due date, TDS is deducted and deposited. Will it be allowed? Yes. How much will be allowed? 30,000. Because 70,000 you would have already claimed last year. So what is disallowed here will be allowed next year if you have made it good. That is TDS, whatever non-compliance was there. If you have complied with it, next year, whatever was disallowed in the current year will be allowed next year. Okay. Then the third one here. Second one. As per section 48(2), income tax or foreign income tax will be disallowed. Anything paid under income tax is disallowed tax, including surcharges, cess, everything. Anything you pay is disallowed. Then amount paid by way of royalty, license fee, service fee, privilege fee, service charge by the state government undertakings to a state government. So who is the person who has received it? State government. Who is paying it? State government undertaking. It will be disallowed for state government undertaking. Next, as per section 40A(3), guys, one special thing, different provision is covered here. Salary payable outside India or to a non-resident, if TDS has not been deducted or deducted but not remitted within what date? TDS due date. Not due date of filing the return. TDS due date. And in bracket, I have also mentioned 7th of next month. Permanently disallowed. Permanently disallowed. Sir, I deposited on 8th, sir. I deposited on 10th, sir. Thank you. Completely disallowed. Completely disallowed. Please be careful. 40A(1) and 1A told different, whereas 3 is telling different. Now, sir, even 40A(1) covered salary, any sum payable outside India one, no, sir? Yes, but other than salary. Other than salary, because for salary we have a separate point. Anything other than salary payable outside India and all, they are for a non-resident, that would be covered under 40A(1), guys. Next, 40B. There is an amendment in this. 40B applicable only for partnership firm, guys. Only applicable for partnership firm. Interest to partners on capital or on loan will be allowed maximum 12%. Maximum 12%. Provided it is prescribed in the deed. Sir, deed is silent, sir, about interest. Can we claim any deduction for interest? No. You cannot claim any deduction for interest. Now, sir, deed is telling that interest on capital is 15%, sir. How much the partnership firm can claim? Only 12%. Maximum 12%. Sir, deed itself is telling 8%, sir. How much the firm can claim? 8%. And interest is allowed for any partner, working, sleeping, whatever, because they have invested capital. For that, interest is allowed. Then, salary, bonus, commission, remuneration paid by the firm to partners is allowed only if the partner is a working partner. And in the deed, the amount of remuneration is mentioned or the manner of calculating is mentioned. Yes, sir. That is only for working partners. Please be careful. Sir, how much remuneration, sir? Actual remuneration or the limit as per 40B, whichever is lower. Now, what is the limit as per 40B? Amendment. Limit as per 40B amended. First, calculate book profit. Book profit of the firm means the profit of the firm after all expenses for remuneration. If remuneration is already debited, add it back. Calculate book profit. Now, once you have calculated book profit, on the first 6 lakh of book profit, it is 3 lakh or 90% of the book profit, whichever is higher. And on the balance, it is 60%. Sir, what if I have book loss? Straight away take 3 lakh. Sir, I have book profit, maybe 2 lakh. Then 2 lakh into 90% comes to 180. 180 or 3 lakh, whichever is lower, 3 lakh. Sorry, whichever is higher, 3 lakh. How much you can claim maximum? 3 lakh. This 3 lakh is for the remuneration paid for all the partners put together, not for single partner. You may have 3 partners, all 3 partners put together 3 lakh. You might be paying 3 lakh per month per partner. Doesn't matter. How much maximum you can claim? 3 lakh. Okay, let me just take an example, guys. Assume, sir, the book profit is 8 lakh, sir. Book profit is 8 lakh. How do we calculate it? On first 6 lakh. On first 6 lakh, 90%, which comes to 5 lakh 40,000, not 9 lakh. I heard from someone 9 lakh. 5 lakh 40,000. 5 lakh 40 or 3 lakh, whichever is higher, 5.4. Next, remaining is how much? 2 lakh. On 2 lakh, 60% comes to 120. 1.2. So what is the maximum remuneration which is allowed? 7.6. 7.6. Listen. 7.6 on, sorry, 6.6. 6.6. I understood. When I saw you staring at me, I understood. 6.6 is the maximum limit as per 40B. Assume actual remuneration is only 5 lakh. How much is allowed? 5 or 6.6? 5. Assume actual remuneration is 20 lakh. How much is allowed? 6.6. Now listen. How much is allowed as an expenditure for a firm? 6.6 lakh. Now how much is taxable for the partner? 6.6. Under which head? PGBP. Under the head PGBP. Section 28 clearly tells what is allowed for the firm is taxable for the partner. Sir, partner has received a 20 lakh salary, sir. Doesn't matter. What is allowed for the firm as an expenditure will become income for the partner. Correct? Now, one man's expenses is another woman's income. Agree with me? Yes. So, what is allowed as an expenditure for the firm is an income for the partner. Clear? Partner would have received more than that. Doesn't matter. Doesn't matter. Okay, so 40B done. Next, 40 capital A series. 40 capital A series, guys. Yes, chalo, we'll proceed. Section 40A2 tells if you pay unreasonable amounts to your relatives or associated concerns, then A2. Then A2 means disallowed. How much, sir? Full amount? No, whatever is unreasonable. Whatever is unreasonable. Now assume for my business, I made some payment to my brother, 10 lakh. But actually fair expenditure at arm's length price is only 6 lakh. How much is disallowed? 4 lakh. 4 lakh would be disallowed, guys. Next, this is a very important section. As per 40A3, if any payment is made to a single person in a single day more than 10,000, more than 10,000, complete expenditure is disallowed. Sir, I paid 12,000 to you. To you. Single only, na? Yes. Even, see, don't take it in another way, sir. Single or married or no, no, no. For a single person, 12,000 is paid on a single day in cash. Fully disallowed, yes. Or only 2,000 disallowed, full 12,000 is disallowed. 40A3. And it has some exceptions and all. But see, 10,000 is the normal limit. But if the payment is made to goods, carriages and all, then the limit is extended to 35,000. 35,000. And there are certain exceptions also under Rule 6DD, where you can make payment in cash more than this limits also. Like you have paid to farmers where there is no banking facility, or you have made the payment to banks and all, sir, allowed. You can make it. I will just show you, because if at all, if they have tested on it, you should be knowing it. What and all is covered in Rule 6DD. Yes, this. These are the cases from A to H, whatever I have mentioned here. These are the cases where 10,000 limit is not applicable. Is not applicable, guys. Any amount you can pay. But here and there conditions are there. Only if conditions are satisfied, you can enjoy it. Yes. Sure. I'll just move forward. Guys, one more thing. Sir, I had claimed one expenditure, sorry. I had claimed one expenditure in 24-25, 1 lakh on accrual basis. On accrual basis, I have claimed it, sir. Next year in 25-26, I paid it in cash, sir. Now, how can you disallow? I have already claimed it. How do you disallow me? What you have claimed already will become your income now. Hope you are understanding it. They told if you pay in cash, disallow. Sir, I already claimed last year on accrual basis. Now this year I am paying it in cash. When you pay, it becomes your income. Clear? This is also as per section 40A 3A. 40A 3A. Is that clear? Yes. Sir, this year itself I have paid in cash. Right away disallowed. This year I have claimed on accrual basis. Next year I paid in cash. Next year it becomes your income. Next year it becomes your income. Now let me tell one tricky point. Listen here. Here they are telling if the amount of payment is more than 10,000 for a single person in a single day, it is disallowed. Now assume, guys, I have employer has paid health insurance premium 5,000 in cash. Allowed or disallowed? Employer has paid 5,000 health insurance premium for employees' health, 5,000 in cash. Allowed or disallowed? Disallowed. Disallowed. Sir, less than 10,000. No, section 36 only blocked it. Section 36 itself will block it. Health insurance premium paid, irrespective of the amount, if you pay in cash, disallowed. Now you may tell, sir, 40A3 tells only 10,000, no, sir. 40A3, you will apply only for the expenses who has crossed all these sections and has gone there. Clear? So for this expenditure, 36 itself will block you. Will you go and apply 40A3? No need. No need. Same way. Sir, I have incurred a capital expenditure more than 10,000 in cash. Section 43 subsection 1 is telling you cannot add it to the block. Clear? For that, can I go and disallow under 40A3? No, no. 40A3 is revenue expenditure, not capital. Did they tell it in the section? No. But you have to understand in that way. Because if it is a capital expenditure, you cannot add it to the block. You cannot add it to the block. And guys, even 35 AD and all, which gives deduction for capital expenditure now, there also they have that condition. If you pay more than 10,000 in a cash to a single person, disallowed. You cannot claim that. You cannot claim it. Okay. Connections are important. And easy to remember 40A3 also. 40A3 and A2 both are easy to remember. If you pay unreasonable payments to your relative, A2. A2. You know what is the meaning of A2? Yes. Next, sir, 40A3. Cash payment. Cash starts with C. C is the third alphabet. ಅದನ್ನ ರಿವರ್ಸ್ ಮಾಡಿ ಸಿ ಆದ್ಮೇಲೆ ಎ ಬರುತ್ತೆ 40A3. Got it? Yes. Because sometimes you will get when 40 A3 na A2 na anta. Make use of this shortcut. Next 40A7. No deduction shall be allowed in respect of any provision made by the assessee for payment of gratuity to his employees. Now, gratuity is something, a lump sum payment which employer will pay to employee. So all of the sudden it will be difficult for him to arrange for the huge money. So what he will do, every year he will keep aside a part of his profits to pay to the employee as gratuity, maybe at the time of his retirement. So every year we are setting apart, we are creating a provision for the payment of gratuity to be made in the future. When I have created the provision, can I claim deduction? No. When you have actually made payment, you can claim full deduction. Whatever amount you have paid, you can claim full. Okay, so next 43A. 43A talks about asset. Easy. A for asset. Which assets are foreign asset? Foreign assets. So guys, listen. 43A is applicable only when you have purchased the asset from a foreign supplier on credit. Or else you have purchased the asset here only by taking the loan from foreign lender. Foreign lender. Now listen guys. When is this exactly applicable? I will tell you. Sir, I have purchased one asset, maybe from foreign supplier on credit or by taking loan from foreign bank. My commitment was to pay $1 lakh, sir. $1 lakh. And the exchange rate when I purchased and I started using it was 75 rupees per dollar, sir. Per dollar. How much I would have capitalized, guys, in my books of accounts? 75 lakh. Added to the asset to the block, started claiming depreciation. When I am paying, exchange rate may not be same. This is the date of purchase and put to use. Now, when I am repaying the loan, or maybe when I am paying it to the foreign suppliers who sold me the asset on credit basis, the exchange rate will be different. Definitely, it will not be exactly 75. Let us take two possibilities. It is 80 rupees per dollar or 73 rupees per dollar. Both cannot happen simultaneously, any one now. Okay. Now, I will end up paying, when I am paying how much? 80 lakh. But I have already booked the asset for how much? 75 lakh. So, how much is extra exchange loss for me? 5 lakh. Can I add it to the block of the asset? Yes, I can add it. For the whatever is the actual cost of the asset as on today, I can add it 5 lakh. When I'm actually paying the amount, not at the end of the year. In your accounts, you would have learned it in a different way. Sir, on 31st March, on the reporting day, we change the values. No. For taxation, we are not changing the values on 31st March. We are changing the values on the date of payment. On the date of payment, you might have exchange loss or exchange gain. If it is exchange loss, add it. What do? Add it. Next, what if it is exchange loss, sir? Sorry, exchange gain. I had already committed for 75, but I ended up paying 73. So what is my total cost now? 73 lakh. But I already booked 75. So what is my exchange gain? 2 lakh. What should I do? Deduct it. Deduct it from the asset value. Again, same story. When will I deduct? At the time of payment. At the time of payment. It's very simple. So if it is exchange loss, add it. If it is exchange gain, deduct it. Exchange loss, how will I know whether it is loss or gain? If you ended up paying more, loss. If you ended up paying less, gain. And depreciation and all, you will continue to claim on the revised value. That is increased or decreased cost. Then 43B, important. Here they are telling the following expenses are allowed only on payment basis. Guys, see, section 145 tells for the assessee who is having income under the PGBP and other sources. For income tax purpose, they can either follow cash basis or mercantile basis, whatever they are regularly following. They are giving that freedom. Whatever I am regularly following for my maintenance of books of accounts, same thing I can follow to compute the income under the head PGBP and other sources. But here they are telling, irrespective of the which scheme you are following, which basis you are following, the following expenses are allowed only if you have paid it within the due date of filing the returns, not within 31st March. My year will end on 31st March, but they are giving time till when? Due date of filing the returns. Let us take it as 31st October. So if you don't pay the following expenses is relating to which year? 24-25. If you don't pay this expenses relating to 24-25 within 31st October 25, then you cannot claim it in this year. Assume you paid it in November or December of next year. When will you claim it? Next year. This year it is disallowed. Next year you can claim it. Which are those expenses, sir? Let us see. As per section 43B, deduction will be allowed of the following expenses only on payment basis. That is, only if the payments are actually made within the due date under section 139(1), which I already told you. That is why, guys, because they are giving reference to due dates, that is why I just went to assessment procedure chapter, touch the due dates and come back. Because it is good to know for you to connect to the topics, what is the actual due dates. Okay. Which are the expenses covered here, sir? Taxes, duties, cess or fees payable under any law. Here, under any law will not include income tax law. Why? Anything you pay under income tax law is not allowed. As per 40 small a 2. Small a 2, we learned it. Income tax, including foreign income tax, is not allowed. So here, what taxes, duties and all is covered, sir? GST, municipal tax, those items. Yes. Bonus and commission to employees. Interest in respect of term loans or advances borrowed from specified institution. Leave encashment. For employee, he can claim exemption under section 1010 AA. Employer expenses, alva. Can he claim it as an expenses? Yes. Only if he has paid it. Then amount payable to Indian Railways for use of railway assets. Sir, what will you make the payments for Indian Railways for use of railway assets? Now assume I am a producer company. We are shooting one film on the railway platform or on rail train only, running train, chaya song you have seen, na? Sir, so for that, will the production company pay to the Indian Railways? Yes. They can claim it as an expenditure only if they have paid it within the due date of filing the returns. Next, employer contribution to PF or superannuation fund or any other fund for welfare of employees. Whose contribution? Whose contribution? Employer contribution, not employees. The employees we already seen on section 36 only. What is it telling? When it is received income, if it is deposited within the due date of the fund, not due date of returns, due date of the fund, allowed. If not, not allowed. 1 day late, 2 day late, permanently disallowed. Sir, will it be allowed next month, next year? No. That is for employees' contribution. Whereas employer contribution also 36 told it should be approved, recognized. Here they are telling you should deposit it within the due date of filing the returns. For employers' money, they are giving extra time. Whereas for employees' money, hey, don't play around with employees' money. Deposit it as early as possible. Okay. If payment is made after the due date, then the deduction will be allowed in the subsequent year. Okay. Guys, one more element is there, which is a part of 43B, but provision is different. Provision is different. That is why I have taken it here. This was an amendment in the last year. So what is it? We will see. Sum payable by the assessee to micro or small enterprise for supply of goods or services beyond the time limit specified under section 15 of MSME Act. MSME means micro, small and medium enterprise. But here they are covered only small and micro. Medium is not covered. That is, I am the person who is claiming the expenditure. I have made the payment to whom? Micro or small. If I have not paid it within the due date given under section 15 of MSME Act, then expenses is disallowed. Sir, now what is section 15 of MSME Act is telling? We will see that. If there is a written agreement between the assessee and the micro or small enterprise, if yes, we have an agreement. Yes, then what? Payment has to be made as per the agreement, that is whatever the due date as per the agreement, or within 45 days of accepting the goods or services, whichever is earlier. This is when there is an agreement between assessee and micro and small enterprise. Next, sir, what if there is no agreement? Payment has to be made within 15 days of accepting the goods or services. Sir, what if payment is not made within this due dates? Disallowed now. It will be allowed when actually payment is made. Payment, if it is made in the current year, claim it in the current year only. Payment is made in the next year, claim it in next year. Claim it in next year. Okay, you can see. However, if the sum is not paid within the time limit specified above, the deduction for expenses would be allowed in the previous year in which it is actually paid. Okay, sir. Guys, now Sir, what is this micro and small enterprise? Have they covered under the Income Tax Act? No. Even this Section 15, it is not of Income Tax Act. Please be careful. I will just show you guys that what is micro and small. Yeah, you can see. This is for 43B purpose. What is micro enterprise means? Whose investment in plant and machinery is less than or equal to 1 crore and turnover is less than or equal to 5 crore. Both has to be satisfied. Even if one is crossing, then they are not considered as a micro. Then who is considered as small enterprise? Their investment in plant and machinery is less than or equal to 10 crore and their turnover is less than or equal to 50 crore. 110 extra, that's all. 110 extra, you will go to the next position. Sir, what about medium enterprise? Don't worry about that. For income tax, not important. Okay, sir. Guys, I have given two illustration. Let us just go through it because this is new provision which is added last year because students have some confusion in this, how exactly to apply. I have given two illustration in my regular material. Let us just have a look into it. X Limited purchases raw material on credit from Y Limited. Who is the assessee here? X Limited. Who is the person, the opposite person? Y Limited. Value of invoice is 640. Date of invoice is 1st February. Date of acceptance of goods is also 1st February. So when we are counting the dates, we have to count from what date? 1st February. Y Limited is the manufacturing company and its investment in plant and machinery is 3 crore. Generally, okay, only plant and machinery investment is given. So can we consider them as small? Can we consider them as small? They're covered here? No. Yes. Generally, payment is made by X Limited within 30 days. However, there is no written agreement about the time of payment. No written agreement. So when there is no written agreement, payment has to be made within 15 days. Now, when did you make? Discuss in which previous year X Limited will be able to claim deduction if payment is made on. They have given three different scenarios. Actually, I have made it. Three different scenarios I have given. Okay. 28th February, 31st March, 10th April. Y Limited is a small enterprise. There is no agreement between both the parties. So as per section 15 of MSME Act, payment has to be made within 15 days. Yes. So the date comes to 16th February. Okay. So first case, so payment is made on 28th February. Is section 43B applicable? Yes, because payment is not made within 15 days. 43B applicable? Yes. So deduction is allowed only on payment basis. Payment is made when? On February 28th. Same year. Allowed? Allowed. In which year? Previous year? 24-25. Because even though it is after the due date, payment is made within 31st March. Allowed. Next. Payment date is 31st March. Is it made within 15 days? No. Is section 43B applicable? Yes. On what basis payment will be allowed? Payment basis. Is it made within 31st March? Yes. Can I claim it in 24-25 only? Yes. Next, last case you observe. Payment is made on 10th April, not within 15 days. Is 43B applicable? Yes. Deduction is allowed on what basis? Payment basis. When the payment is made? 25-26. So you can claim the expenditure in 25-26. So in simple, what I am trying to convey here is, even if payment is not made within due date, but made within 31st March, can I claim it? Yes, on payment basis. Sir, payment is not made within due date. It is made in next year. When can I claim it? Next year. Second illustration on the same. Z Limited purchases goods. Invoice value is 11,20,000 on credit from A Limited, a micro or small enterprise as per MSMED Act. MSMED we call it as last D stands for development. Date of purchase is March 2nd. As per written agreement with A, Z Limited has to make the payment on or before 30th April. On or before 30th April. So, date of receiving the goods, I guess here they are given, same, March 2nd only. So, you have to count maximum 45 days because even if there is agreement, you cannot do payment as per the agreement always. It is as per agreement or within 45 days, whichever is earlier. Okay, sir. Due date for payment as per MSME Act is April 16. Why so? Because 45 days. Because whatever date is there as per the agreement, 30th April is beyond 45 days. Is beyond 45 days. Okay. So 45 days has to be counted from what date? Date of acceptance of goods. Okay, sir. So due date is everywhere locked, April 16. Actual dates we will see. Actual dates 30th March. Is it paid within the due date? Yes. So is 43B applicable? No. If it is paid within due date, 43B is not applicable. So can I claim it on accrual basis? Yes. Which year? 24-25 only. Next, payment is made on April 6th within the due date. So that means 43B is not applicable. So I can claim it on accrual basis. For which year? 24-25. Sir, you paid next year. No, sir, no problem. It is paid within the due date. When it is paid within due date, 43B is not applicable. So can I claim it on accrual basis? Yes. Next, April 15th. Again within the due date. 43B is not applicable. Can I claim it on accrual basis? Yes. Accrual means even though payment is made next year, it was accrued during the previous year. Can I claim it? Yes, for 24-25. Last case. Paid on May 6th, not paid within the due date. So is section 43B applicable? Yes. Deduction is allowed only on payment basis. When is it? 25-26. 25-26, guys. Yeah, coming to deemed profits. Guys, the following incomes are taxable even if the assessee has already shut down his business. Even if assessee is already shut down his business. What are those? Section 41, taxable under PGBP only. First, 41 subsection 1, remission of liability or recoupment of loss or expenditure. Guys, in the past, assuming previous year 2021, I had claimed some expenditure or losses under the head PGBP. Now I have recovered it in 24-25. Is it taxable for me as business income? Yes, it is taxable. If it is a bad debt recovered, we have a separate section for it. Subsection 4. If it is any other expenditure or loss, then subsection 1. And bad debts recovered also, is it taxable in the year in which it is recovered? Yes. By chance, if something was disallowed previously, when I had claimed, assume I had claimed bad debts of 50,000, but assessing officer disallowed 20,000. So when I have recovered it, reduce 20,000. Only remaining would be taxable. So in simple, from the bad debts recovered, if anything was disallowed in the year of loss, reduce it, only remaining would be taxable, guys. Only remaining would be taxable. Next, balancing charge on the assets depreciated under SLM for power sector. Power sector, if they are following SLM method, they will claim depreciation on asset to asset basis. And when asset is sold, if they have earned profit, they are naming it as balancing charge. Is that profit taxable under the PGBP? Yes. And if it is the loss on sale, guys, they allow it fully in the year of sale. They allow it fully in the year of sale as expenditure. You can claim it. Okay. Bad debts, I already spoke with. Then subsection 5. Guys, I have already shut down some business. From that business, I have some loss. And for the loss, business loss, maximum period you can set off is, carry forward and set off is 8 years. Now, sir, 8-year period is also over. 8-year period also is over. And for the same business, 10 years back, I had claimed some expenses. I had claimed some loss. Now I have recovered it. What is the amount, sir? Assume 10 lakh. Is this taxable? Yes, as per section 41, subsection 1, taxable. From the same business, I have some loss also, no, sir. Can I adjust it? Yes. Even though you have closed that business, assume the loss is 6 lakh. Can I adjust it? Yes, remaining is taxable. Remaining is taxable. Hope you understood. This is for the same businesses. What you have recovered is also from the same business. What loss you had in the past also is from same business. Even if 8 years period is over for this loss, still you can adjust it. Still you can adjust it. I know already you are looking for page numbers. How many pages are left in this head? Headache, biggest headaches are. So we are done with first part. Calculation part we have taken care. Calculation part we have taken care. Next, who should maintain the books of accounts? Who should get audited? And there are some presumptive schemes available. What are those? Section 44 AA of income tax law tells who should maintain the books of accounts. AA, books of accounts. Guys, please be careful. This turnover limits and all, you have to keep it in mind. They may ask descriptive, if not MCQ also. Yes. First, for specified person, guys. Let us first see who is specified person. Who is specified person is given in rule 6F. Specified person includes persons carrying on the profession of legal, medical, engineering, architectural, accountancy. We are also covered, practicing chartered accountants, or technical consultancy, or interior decoration, or a film artist, or a company secretaries are also covered, and information technology professionals. If they are practicing as professionals, then when should they maintain books of accounts? If their gross receipts is more than 1,50,000 in the last 3 years continuously. We are seeing for which year should we maintain the books of accounts? 24-25. Don't see the gross receipts of 24-25. See it for last 3 years. For all 3 years, it should be more than 1 lakh. And for profession, we never call sales or turnover because we cannot sell ourselves. What we can provide is only services for which we will charge the fees, which is called as gross receipts. Okay, sir. Next, what if he is a non-specified person, that is other than specified? We will divide it into two categories, guys. Individual HUF and other assessee. So if a non-specified person is an individual or HUF, when should they maintain books of accounts? If their income from business or profession is more than 2,50,000, that is income or profit, or turnover or sales from the business or profession is more than 25 lakh, 10 times more. Or you can keep it as like profit margin 10%. 25 lakh sales, so profit how much? 2,50,000. If any one is crossed also, they have to maintain books of accounts. Crossed when, sir? In any 1 year out of last 3 years. In any 1 year out of last 3 years. Not all 3 years. Here it was all three. Here it is any one. Yes, sir. Then other assessee means like company, firm and all. They have to maintain books of accounts if their income from business or profession is more than 1,20,000 or turnover is more than 10 lakh in any one out of the last 3 years. Sir, what if I have set up my new business or profession in the previous year? Loose provision. Actually, there is no logic behind it, but still, what they are telling is if you expect that if your turnover or income crosses so and so limit applicable for you by 31st March, if you feel that you will cross it, maintain books of accounts from day one because you don't have any reference to your past. So if you feel that, sir, I don't feel it, then I don't know what is the answer for it. Clear? Because they told if you feel it, you will cross the limits, then maintain books of accounts. Sir, what if I don't feel? What if I underestimate myself? Okay, then there is no answer for that question. Clear? Maybe you can request the assessing officer, sir, I didn't expect that my business will take off like this and all. Maybe he can give you the exemption. Okay. I have given some examples here, illustrations. Let us see, guys. Specified person we are seeing, should he maintain books of accounts for the previous year 24 or 25? Now check. For all 3 years, what is his gross receipts? What is his gross receipts? 120, 180, 250. For all 3 years, it should be more than how much? 150. Actually, it is more than 150 for 2 years, not for all 3 years. So should he maintain books of accounts in the previous year 24-25? No, sir. Next, you can observe here all 3 years more than 150. Should he maintain books of accounts in 24-25? Yes. Next, non-specified person who is an individual or HF. This category I am covering. This category 250 and 25 lakh. Gross receipts 15, 20, 24 not crossed. In any year not crossed. Income 120, 180, 240 not crossed. Not crossed anywhere. No books of accounts. Next, same scenario but different numbers. Gross receipts 19, 22, 26. 26 crossed. Straight away books of accounts applicable, huh? Yes. Even if one thing is satisfied, enough. Sir, should I check income again? Not required. But still you see 180, 280, 340. 280, 340 crossed. Should we maintain books of accounts? Yes. Guys, any one also satisfied, enough. In any 1 year, either income is more or gross receipt is more than the limit given. Maintain books of accounts. Then non-specified persons, others. Means I am talking about this category. Gross receipts or turnover 5 lakh, 7 lakh, 9 lakh, everywhere 10, less than 10 lakh. 20, 80, 140 within the limits. No books of accounts. No books of account. 1 second. 120 and 10 lakh. Did they cross anywhere? Okay, here not crossed. Here actually, last case it is cost. Sir, one case it is cost. Maintain books of accounts. Maintain books of accounts. Here, sir, are we crossing? Yes, we are crossing. Should we maintain books of accounts? Yes, guys. That's all. Next. Second and third, I will cover it later. Books of accounts has to be maintained for 6 years from the end of relevant assessment year. Effectively, it will be for 8 years, guys. Because, listen. My previous year is what? 24, 25. Assessment year would be what? 25, 26. End of assessment year is what? 31st March 26. You have to maintain plus 6 years. Books of accounts is for which year? 24, 25. So obviously you would have maintained for this year, plus 6 years. Effectively how many years? 8 years. Clear? Yes. It's like you guys do. Sir, after the exam attempt, I will throw my books, I will put it for scrap. No, you cannot take that risk. You are doing CA, boss. Okay, you cannot take this. Anyone took that risk? Never. CA students will never. Okay, even if they are very sure that I will get all India rank also, for safety they would have kept it. Clear? So, like that. Sir, once the year ends, shall we throw our books of accounts? No. You have to keep it for 6 years from the end of assessment year. And even after that, can I maintain? Yes. Madam, finish talking. Focus. Sir, if I am supposed to maintain books of accounts, what if I am not maintained? Penalty. Penalty under section 271. Yeah, how much? 25,000. 25,000. Next. Sir, who should maintain their books of accounts? We saw. Who should get it audited, sir? Who should get it audited? Section 44AB makes it obligatory for a person to get his accounts audited before a specified date. Specified date means, guys, 1 month prior to the due date of filing the returns. When audit is applicable, what is the due date to file returns? 31st October of assessment year. 1 month prior to that means on or before 30th September, copy of audit report has to be filed. Who should sign this audit report? Boss, chartered accountant in practice. Okay. When audit is applicable, as per 44AB, if total sales, turnover or gross receipt in business is more than 1 crore, but 1 crore limit is extended to 10 crore subject to condition. What is that condition? Aggregate of all amounts received and all payments made in cash should not exceed 5%. That is, your receipts and payments both maximum can be 5% in cash. If it is crossing 5%, then what is the turnover applicable for you? 1 crore. If you cross it, audit is applicable. No, sir, my cash receipts are very minimum. Cash payments are also very minimum. Less than 5% of my total. Then, what is the turnover applicable for me? 10 crore. Assume my actual turnover is 7 crore, 6 crore. Is audit applicable for me? No. Next, if you are covered under section 44AD presumptive scheme, even though your turnover is more than 1 crore, because presumptive scheme is available up to your turnover is 2 crore or 3 crore under 44AD. Sir, when I am following 44AD, no books, no audit, no sir. Yes. But here they are telling more than 1 crore audit, no sir. No problem. If you are following 44AD sincerely without chemming anything, then for you, no audit, no books. No, you are chemming something means you are telling no, my income is not presumptive, my income is less than that. Please maintain books of accounts, get it audited and prove it. Yeah, I am chemming. Next, for profession, if gross receipts is more than 50 lakh. But if you are following for your profession 44 ADA, there they have given the limit up to 75 lakh also. Sir, my gross receipt is more than 50 and up to 75, and I am following presumptive schemes sincerely, sir. Then for you, no audit. No audit. Then again, I am also chemming something, sir. Then come and maintain books, get it audited. So for the audit report due date 30th September, that is 1 month prior to the due date of filing the returns. Sir, what if audit is applicable but still I am not appointed as a chartered accountant? Why I don't want any chartered accountant? I can do it myself. No audit, nothing. I can audit myself. So in that case, penalty 271B, 5% of the turnover or 1,50,000, whichever is lower. Be ready for this also. If you feel paying for chartered accountant is costly, be ready to pay penalty. And later, should you appoint chartered accountant? Definitely. Along with penalty. Penalty you will pay to government, fees you pay to chartered accountant. Okay. Few points I have kept it pending as like 3, 4, 5 year and 2 and 3 year because I will connect it to through presumptives. I have given illustration here also on 44 AB. Observe turnover, total turnover is 6 crore and payments is 4 crore. In cash, I have received 20 lakh and I have paid 16 lakh. Check, is it within within 5%? 20 lakh divided by 6 crore you do within 5%. 16 lakh you do divided by 4 crore within 5%. Both are within 5%. What is the turnover applicable for me for audit? 10 crore. What is my actual turnover? 6 crore. Is audit applicable for me? No. Audit is not applicable for me. Next case. Turnover is 8 crore. Payments are totally 6.5 crore. In cash, I have received 45 lakh. Check. 45 lakh divided by 8 crore. Is it within 5%? Is it within 5%? No, sir. More than. Check it. 45 lakh divided by 8 crore. 5.62. More than 5%. Next payment 6 crore 50 lakh. 26,000. Sorry, 26 lakh is paid in cash. Maybe less than 5%. How much is that? Huh? 4%. Less than 5. But one is violated. One is violated. What is it, sir? My receipts in cash is more than 5% of my total receipts. So what is the turnover applicable for me? 1 crore. What is my actual turnover? 8 crore. Have I crossed 1 crore? Yes. Is audit applicable for me? Yes. Should I appoint chartered accountant? Yes. Next, presumptive schemes, guys. Not all presumptive schemes are covered for you. Only 3 presumptive schemes are covered for you in your intermediate syllabus. What for AD, ADA, and AE. There are others presumptive scheme also like B, BB, BBB, and all. That is not a part of your syllabus. Okay. Presumptive taxation under section 44 AD. This is for business. For professions, we have 44 ADA. Okay, we will see what is it. Guys, please be careful with each and every point because only when everything is taken care, we can apply this. If not, no. This section is applicable to resident individual HUF and firm other than LLP. Actually, in income tax law, wherever firm is there, firms includes LLP. But here they are telling it is available. Presumptive scheme under section 44 AD is available only for resident individual HUF and firm. And firm here will not include LLP. Sir, is it available for companies and all? No, they told only 3 people. Individual, firm, and HUF. The two if they are resident. The two if they are resident. All 3 should be resident. Carrying on any business other than business referred in section 44 AE because for them they have a separate scheme. Total turnover or gross receipts from such business in the previous year does not exceed 200 crore. That is less than or equal to 200 crore. Or else they have extended this to 3 crore with condition. That is aggregate cash receipts in relevant previous year is less than or equal to 5% of the total turnover or gross receipts. Only receipts are covered here. Payments they are not touched. For audit, we saw both receipts as well as payments should be within 5% in cash. But here only receipts should be in cash within 5%. Okay, sir. How much is my presumptive income, sir? 8% of your gross receipt is your income. Remaining 92% is considered to be your expenses. But they have reduced it to 6% if you satisfy certain condition. What is it, sir? Presumptive income under section 44 AD shall be calculated at 6% on the turnover or gross receipts sales if the following conditions are satisfied. Both has to be satisfied. Turnover or gross receipts sales is received by any mode other than cash and the above payment is received during the previous year on or before the due date of filing the returns. Not within 31st March, within the due date of filing the returns. I will explain this with an example. Sir, how exactly 8%, when exactly 6%, I will show you. I have one illustration here. Yes, this is a part of my provision book. Just listen, observe, enjoy. You need not even take down also. If you want, you can take down. If not, just observe. Turnover of a business for previous year 24-25 is 1.5 crore. Am I eligible for presumptive scheme? Yes. Out of which 80 lakh was received before the due date in any mode other than cash. So on 80 lakh, what is the percentage? 6%. Okay, lock it. Then 30 lakh was received before the due date, but in cash. So on 30 lakh, what is the percentage, guys? 8%. Then remaining 40 lakh was received, but after the due date. If you have received after the due date, how you have received doesn't matter. It is 8%. How much is that? 40 lakh. 40 lakh, 8%. This is your presumptive income. Presumptive income. Hope you understand. So only for the amount received before the due date in any mode other than cash, it is 6%. For any other amount, 8%, guys. Next, the person whoever is following presumptive scheme, if they are liable to pay advance tax, they will pay it in one shot on or before 15th March. Whereas others and all will pay in 4 installments quarterly. But this guy will pay it in one shot because they want to reduce their compliance burden. That's all. The following people are not eligible for 44 AD presumptive schemes, guys. Who are those? The person who are covered under section rule 6F. Sorry, not section, rule 6F. That is specified profession. Why, sir? For them, there is another presumptive scheme. 44 AD adda anta. A person earning income of the nature of commission or brokerage. A person who is doing agency business. Because for these people under profit margin will be more. So let us not give them the option of 44 AD. Then 44 AE, that is goods carriage business. For that also we have separate presumptive scheme. Then the assessee, whoever is following or claiming exemption under section 10A, 10AA, 10B, 10BA or any other deductions under chapter 6A, heading C. That is what we call income based deductions. So if you are claiming any of this, no 44 AD for you. Either forego this or forego that. That's all. Next, once you are following 44 AD, you have to follow it for next 5 years. That is effectively 1 plus 5. In any of these 5 years, if you are coming out, once you come out of 44 AD, next 5 years, doors are closed. Even if you are satisfying all conditions, still next 5 years, you cannot come inside the 44 AD. You cannot come inside 44 AD, guys. That is the year you have gone out, plus 5, effectively 6 again. Sir, in the 6th, 7th, 8th year, assuming 8th year, can I come back? Yes, provided you have satisfied all other conditions. You can come back. Now, when you go out, you will calculate the income as per normal provision, considering what is allowed, what is disallowed. You yourself is taking extra burden. Yes. If that income is more than basic essential limit, you have to maintain books of accounts, get it audited. Get it audited, guys. Okay, sir. Next. Now, 44 ADA person, specified person have been kept outside 44 AD. Why, sir? Because for them we are giving separately 44 ADA. This section is applicable to resident, individual or partnership firm, but not LLP. Engaged in the specified profession as per rule 6F and whose gross total receipts in the previous year is up to 50 lakh. Or they have increased it to 75 lakh, provided your cash receipts is within 5%. If your cash receipt is more than 5%, then the limit applicable for you is 50 lakh. If you cross 50 lakh, you will not be eligible. Okay, sir. What is the percentage of income, sir? 50% of your gross receipt is your income. Remaining 50% is considered to be expenses. For business 8%, you are there telling 50%. Yes, for professionals, cost is lower. You will understand once you start your articleship. You will understand what is your. You will start calculating your boss expenses and all. Okay, how much stipend he is paying, how much fees he is collecting and so all this calculation you will do, you will understand then. Normally for professions, the expenses are lower when compared to business guys. Then even if this guy is liable to pay advance tax, he has to pay it in one installment on or before 15th March of previous year. Then for the assessee who is engaged in the business of renting out or leasing out the goods carriages, for him there is a presumptive scheme available under section 44AE. Assessee who carry on the business of plying, hiring or leasing goods carriages and who owns not more than 10 goods carriages, that is less than or equal to 10, at any time during the previous year, the income shall be computed as follows. We have to check whether the goods carriage is heavy goods vehicle or other than heavy goods vehicle. How will I decide whether the vehicle is heavy goods vehicle? Heavy goods vehicle means the gross vehicle weight, not goods weight. Vehicle weight is more than 12,000 kilograms or 12 tons. Oh, so in case of heavy goods vehicle, what is the income, sir? 1,000 rupees per ton of gross vehicle weight or unladen weight for every month or part of the month. Even if it is 10 days, 15 days in a month, you will take consider as full month. 1 day in a month, full month. Yes, sir. Few hours in a month, full month. So please be careful. 1,000 rupees is per ton. Assume the gross vehicle weight is 15 tons. So how much should we take? Assume we have owned this vehicle for full 12 months. 1,000 rupees into 15 into 12 months. Clear, guys? In between, if there is a purchase, sale, and all, please be careful. Including that month, take months. Calculate the months. Okay, and here the assessee should own the vehicles. Even if he has purchased it on hire purchase, can we consider it as owned by him? Yes. Next, sir, he owns 8 vehicles, but in a month only 6 vehicles was used. Remaining 2 was simply standing idle. Should we calculate income for that also? Yes. They didn't consider the income based on usage. They consider the income based on ownership. If I just own the vehicle is enough. Even if I have not used it in a particular month, should I still consider it as an income for that month? Yes. Next, vehicles other than heavy goods vehicle. Presumptive income would be 7,500 for every month or part of the month. No weight importance here. 1,000 here was per ton per month every month. Whereas here 7,500 per vehicle every month. Every month, guys. Now listen. Guys, for 44 AD and ADA, if you are following presumptive scheme and if you are disclosing the income as per that, okay, no books, no audit. No books, no audit. Sir, can I disclose more? Department is happy. I too disclose it. Sir, what if I disclose less? If you are not agreeing, assume guys, as per presumptive scheme, you have got the income, presumptive income, 10 lakh. But you are telling, no, sir, my income is less than that. Calculate as per normal provision. Check what is allowed, what is disallowed, calculate it. If that figure is more than basic essential limit, maintain books of accounts, get it audited. This is for which sections? 44 AD and ADA. Whereas for 44 AE, if you tell my income is not as per presumptive income, maintain books of accounts, get it audited. Sir, should I check what is my basic essential limit and all? No, that condition is not there for 44 AE. That condition is not there for 44 AE, guys. That is what I had kept it pending here. Books of accounts, you can see. Second point, where the PGBP are deemed to be the profits and gains of business under section 44 AE, 44 BB and BBB. BB and BBB is not a part of your syllabus, you need not worry. And assessee claims his income to be lower. No reference to basic essential limit here. Next, third, where the provisions of section 44 AD4 and 44 ADA, 44 AD4 means what? You are going outside. Next 5 years you cannot come in that points. Are applicable to him and his income is more than basic essential limit. And here income means only business income or total income? Total income, not business income. Okay. Here also same story, guys. Under 44 AB, third point. In case of assessee covered under section 44 AE, BB or BBB and is claiming income lower than that. Whereas if the assessee is covered under 44 AD4, then if his total income is more than basic essential limit, get it audited. Then a person covered under section 44 ADA declares his income lower than presumptive income and his total income is more than basic exemption limit. Then maintain books and also get it audited. Clear? And even hope you guys understood this limits and all. Guys, actual limit is 1 crore here, but it is increased to 10 crore depending upon some receipts. Okay. Now I have also given a note here. Sir, what if my turnover is more than 2 crore but up to 10 crore? More than 2 crore up to 10 crore. Should I get it audited? Yes. But what if it is more than 1 crore up to 2 crore? For me, presumptive scheme is available under 44 AD. Yes. Assume I am following it. Should I get it audited? No. I need not get it audited. Same way here. If for profession they have told 50 lakh, but 44 AD gave the benefit up to 75 lakh. Clear? Even 44 AD also gave a benefit of 3 crore also, subject to some condition. Yes, sir. Now assume my gross receipt is more than 50, but up to 75. I am following 44 ADA. Should I get it audited here? No. Okay. Some common points for all these 3 sections, guys. When you are following presumptive scheme, all expenses are deemed to be allowed. Sir, I have my presumptive income is 10 lakh. Can I claim any expenditure from that? No. All expenditures are deemed to be allowed. Even the WDV of the assets you will claim or you will calculate as if depreciation is allowed. But can you come and reduce depreciation from this? No, no, you cannot. Next, sir, what is the main purpose of this presumptive schemes? To reduce compliance burden. For small businesses and professions, maintaining books to check what is allowed, what is disallowed, and all is a big headache. They have to focus more on their business initial stage, startup stage. So, under income tax, they gave a benefit of presumptive scheme, telling, okay, enjoy. You need not maintain books of accounts, you need not get it audited, you need not even worry about what is allowed, what is disallowed. Big list is there. Don't worry. Your compliance burden is reduced. So you can reduce your cost also, because if I have to maintain all this, I have to keep some experts to check what is allowed, what is disallowed, to maintain books of accounts, to get it audited and all, which is a costly affair for me. So they told, okay, we support small businesses and professionals by including some presumptive schemes, guys. Is that clear? Yes. But one catchy point here is, guys, in 44 AE, if the associate covered is a partnership firm, from presumptive income, they can claim only one expenditure, which is as per 40B. As per 40B, let me read it. Salary and interest paid to its partners shall be deducted from the income computed under section 44 AE, subject to the conditions and limited given in section 40B. Means only if the partnership firm is covered under 44 AE, for them from presumptive income, can they claim 40B deduction both for interest as well as remuneration? Yes, they can claim. Whereas for any others, no deduction is allowed. Now, sir, what if partnership firm is covered under 44 AD or ADA? Can they claim 40B deduction? No, no, no. It is only for 44 AE. 44 AE. Okay. Guys, if I have to connect direct tax with indirect tax, similar to this, something they have also included in GST called compensation scheme under section 10. There also, sir, paying tax at normal rates and all burning for me, sir. So following books, sir, what is the rate? Everything is difficult for me, sir. If I am a small supplier, can I follow composition scheme? They have changed the name, not presumptive. There it is, composition scheme. There are two composition scheme, 10.1, 10.2A. 10.1 is for RTM, restaurant suppliers, traders of goods, manufacturer of goods, or MTR. You know MTR, na? MTR, manufacturer, trader, and restaurant supplier. Next, 10.2A is for anyone who is not eligible for 10.1. Clear? More about this, we will see it in indirect tax. Not done, not done. Control. Sir, what if I have loss under that PGBP? Will I have it? Definitely. See, if I am the employer, guys, PGBP always learn from employer point of view. Clear? Now, my employee can never have a loss. I can go for a loss, but my employee can never have a loss. So, no loss under that salary. But can employer or business have a loss? Yes. Guys, for income tax purpose, for loss adjustment, we will treat the business into three categories. For three category, only for loss adjustment point. What is it, sir? First category, speculation business. Second category, specified. Last category, all others. All others. So speculation business means anything I buy and sell online without physical delivery. That is called speculation. I am taking the advantage of price fluctuations like intraday transaction and all. Buy and sell, or sell and then buy. You know, na, short selling and all. Okay, if at all, if you're connected to investing and all, you can observe intraday trading is called speculation. Sir, what if it is, I buy today and sell tomorrow, short-term gain. Sir, I buy and sell after 12 months, long-term gain. Yes, sir. If it is a speculation business loss, it can be adjusted only against speculation business income. No, no, you cannot adjust it even against other businesses. And if you cannot adjust, you can carry forward it for next 4 years. Even when you carry forward, you can adjust it against same income. Same way specified business. Specified business we understood at 35 AD. Yes. Capital expenditure. Guys, initially these guys will have huge losses because whatever businesses are covered under 35 AD involves crores together investment into their infrastructure. So especially in the initial years, they will have huge losses. For break even itself, they will take years together. So that is why they told when you have loss from specified business, adjust it only against income from specified business. You can carry forward for any number of indefinite period. Sir, loss from one specified, can I adjust it against income from another specified? Yes. Same way, loss from one speculation, can I adjust it against income from another speculation? Yes. Okay, so next coming to any other business. Guys, any other business means they have three options. If it is a current year business loss, adjust it within the same head against any business income. Sir, can any other business loss be adjusted against specified business income or speculation business income? Yes, that is allowed. That is allowed, but vice versa is not allowed. I repeat, loss from other businesses can be adjusted against income from specified or income from speculation, but reverse is not allowed. Reverse is not allowed. Okay, sir. So that means loss from one business can be adjusted against income from another business. What if I don't have any income from other business? Adjust it against other rates except salary. Except salary. Even you cannot adjust against casual income and all, but that we will see it in the set off and carry forward. Clear? Actually, loss cannot be adjusted against cash. Any loss cannot be adjusted against casual income, undisclosed income and all. Clear? Yes. Inter. Fine, sir. Now, if I cannot do inter-rate adjustment also, what, sir? Carry forward for next 8 years. And when you carry forward, you can adjust it only within the same head. Only within the same head, guys. Okay, business loss. See that guy, Papa. Seeing the sky. Shut up. Seeing the sky for what? Huge loss in life. Understood the treatment of business loss? Yes, please be careful. This businesses, what I have divided into three categories only for loss adjustment. Loss adjustment. And if the question is silent about the type of business, you will assume it to be normal business. Normal in the sense other than speculation and specified. Okay. Impact of section 115 BAC under the head PGBP. Means, sir, if the assessee is following default regime, sir, how can the assessee follow default regime, sir? Because it is available only for individual, HUF, UOP, BO and artificial juridical person. We always believe that only companies do business. No, no, no. Can individuals do business? Sole proprietorship? Yes. Can HUF do the business? Yes. Marwadi. You know Marwadis? Yes. Family. So they do business. Now AOP, BOI and artificial juridical person doing business? Yes. So can they follow default regime? Yes. When they are having business to compute income under the PGBP, what is not allowed we are seeing now. Clear? Yes. If it is a company and all, if the question is asked on company and all, don't worry about default scheme and all. Clear? Because this default scheme, what we are covered under section 115 PS is only for slab rate assess. Okay, what and all is not allowed. Additional depreciation 20% is there now for new plant and machinery installed in factory. Not allowed. Sir, normal allowed? Yes, normal allowed. Deduction for donation made to outsiders. There itself I told you in that chart. Donation made to others who are approved. Not allowed. Sir, for my own business, allowed. Next, deduction in respect of capital expenditure of specified business. Allowed. Sorry, not allowed. Now listen. Very interesting thing. Sir, in the current year, 24-25, I am coming for 115 BSc. Welcome, sir. Welcome, sir. Default scheme. So, specified business, 35 AD deduction blocked. 35 AD deduction blocked. Yes. So, when they are blocked, you cannot claim capital expenditure. How can you have a loss? No chances of loss. Once you come under default scheme, you cannot have loss under the section 35 AD specified business. Agree? Because they are not allowing 35 AD. Next. Sir, assume in 23-24, I was following optional scheme and I have claimed 35 AD deduction and I have specified business loss 2 crore. For 23-24, if I couldn't set it off, can I carry forward? Yes, for indefinite period, you can carry forward. Now in next year, I am going to 115 BAC. Can I bring this loss along with me? No. Please leave it and come. Please leave it and come. Why, sir? Simple logic behind this is, under default scheme, we are not giving 35 AD deduction. You have a loss relating to 35 AD. So what you do? Leave it there and come. Leave it there and come permanently. Now you may ask me, sir, what if next year again if I come back to optional scheme? You have already done Tata Baba. You cannot get back it. You cannot get it back. Same way for additional depreciation, guys. See, if there is unobserved depreciation, you can carry forward and adjust it against any heads except salary for any number of years. Even if it is carry forward, can I adjust it against other heads also? Yes, except salary. Now, you had an unobserved depreciation from the past. Assume, guys, 5 lakh. In that 5 lakh, normal depreciation was 4 lakh. Additional depreciation was 1 lakh. Now, in the current year, I want to follow 115 BAC. Can I carry forward this unobserved depreciation and adjust it? Yes, you can. But this you cannot. How much you can carry forward and adjust it? Only 4 lakh. That is unobserved depreciation, which includes only normal. Additional you cannot carry forward. Why? Because additional depreciation under section 115 BAC is blocked. Clear? Now, sir, while calculating depreciation from the block, I would have already reduced this 1 lakh. Na? What should I do with this? Add it back to the block. For the opening written down value of the block, add 1 lakh. Add 1 lakh. And this you cannot carry forward. Only remaining 4 lakh you can carry forward and adjust. Next. There are some surgical strike on cash transaction. Everything combined together in one place I have given, guys. There is rule 6 ABBA Abba. Yugadi Abba ಬರ್ತಾ ಇದೆ. ನಿಮಗೆ ಏನು ಹಬ್ಬ? Only ICA Abba. And what is the irony is, during our exam times only most of the festival will come. Whether it is Diwali, whether it is Yugadi, or any other festival also. Even for CS students also. Papa, during the December exam, that New Year Josh or the Christmas will be there. Clear? Or even if it is a Ramzan or any festivals, normally it will fall during exam time only. Okay, you cannot completely celebrate also, you cannot completely focus also. In between last. But all those things will come again and again. See, exams also will come again and again, but your age will keep on increasing. Okay, so try to clear it as early as possible. Coming back. As per Rule 6 ABBA, the following electronic modes have been prescribed through which payment can be made or money can be received. For the purpose of sections given in the below table, account pay check or bank draft, credit card, debit card, net banking, IMPS, UPI, RTGS, NEFT, BIM. Full forms also you can just go through. Means these are the modes which are prescribed for making payment or for receiving payment. So in simple, in my provisions and all, I would have told you cannot pay in cash, you cannot receive in cash and all. Sir, this rule 6 ABBA is applicable for which all sections, sir? 35 AD, capital expenditure of specified business. You cannot pay more than 10,000 in cash. If you pay, no deduction. Sir, in what mode should I make the payment, sir? The following modes. Guys. Next, 40A3 or 3A, cash payments. You cannot pay more than 10,000 to a single person in a single day. Correct? Now, revenue expenditure. If you pay, full amount is disallowed. Sir, in what mode should I pay, sir? Rule 6, A, B, P, A. Then, actual cost per computing depreciation, same story. Then 44 AD. Guys, 44 AD, two places they have referred to. Under 44 AD, what is the turnover limit? 2 crore. They have increased it to 3 crore, subject to limit. Correct? They have told cash and all. So, how and all I should receive, sir? Remaining 95%, how and all I should receive in the following modes. Next. And 44 AD put one more condition. Actual presumptive percentage is how much? 8. 6% provided you have received in any mode other than cash on or before the due date. Sir, in what mode should I receive? Following mode. Okay. Next, ADA, presumptive taxation for profession. Their also limit is 50 lakh, but they have increased it to 75 lakh. If your receipts in cash is only up to 5%. Sir, remaining 95%, in what mode should I receive? Rule. Next, 44CA and 44C, guys, I will cover it along with capital gains hit. 43CA is a part of PGBP only, but as it is connected to 50C, I will do it along with capital gains. Then 56 to 10 gift taxation, I will cover it in income from other sources. And 80JJAA part of deduction chapter, I will cover it here. Then why did you give it here, sir? Because For which all sections Rule 6 ABBA is applicable. It is good. When you guys covered entire syllabus, it is good for you to know for which all sections Rule 6 ABBA is applicable, guys. Okay, sir. Finally, we are done with the biggest head. Not headache, head. We have taken almost 2 hours 15 minutes, guys. I know it is tougher. See, listen. I too. Listen, sir, it is difficult to sit for 2 hours 15 minutes. Definitely. Sir, it is difficult to sit and study for 10 hours, 12 hours, 14 hours during the exam time. Yes, I agree, guys. But you should know that studying the same thing again and again will be more tougher. Now you are studying for 10 hours. Try to push it for 12 hours. But why? Because again studying for 10 hours will be more painful. Clear? So try to improve your productivity. Try to increase your study time, concentration, attention. I know there will be definitely few factors which are disturbing you or maybe not letting you to focus. Guys, you know with what is that? You are the one who have to take action. I cannot come and help you or someone else. I can help you only in explaining the provisions, understanding the subject. You know where you're getting distracted, where you're wasting your time. Please take action. That is here now. It is high time. Consistency, discipline is tough, is difficult, but without that, you cannot be a professional. Sir, now as a profession, I get paid for each and every minute, each and every hour I work. You guys also will be. First, start learning to value your own time. At whatever time, whatever you have planned, whatever you are supposed to do, please do it. Don't procrastinate. Don't postpone, guys. And too much time also is not left for you. If you think that, sir, missing that, missing this is painful, sir. For example, missing family functions, missing birthday, missing festivals are difficult, painful, sir. Attending them with a failed result or unsuccessful result will be more painful. Sir, now I am missing a family functions. I want to attend it no matter what. Just imagine you have to attend later after 6 months or 3 months. You have to attend one function, very important function. How you want to go as a successful person, unsuccessful person. Everyone you meet will be asking about you. Clear? So please make sure that don't see short-term pleasures you have to forego, guys. Some pleasures, whatever you will get in short term by doing that, this and all, you have to forego because you guys are aiming something big in your life. So if you want to be where you want to be, you have to make some sacrifices. Sir, no, sir, I want to do all that. Along with that, I will do CA. Little difficult, guys. Clear? Here and there, enjoyment is okay. But especially during exam time, you should become Buddha. Are fully attentive, fully sincere. You please dedicate it. Because this 30, 40 days, whatever is left for you, that will decide now whether you will be successful or not. Instead of again studying for another 2, 3 months, repeated, give your best, give your whole and soul, whatever is there, kidney, heart, everything you give to your studies in these days. You will be successful after the exam. Who will ask you till you get results? You have lot of time. Do whatever you want. Do whatever you have sacrificed. Do whatever you have missed. But now it is very crucial for you. Please take it seriously. I'm not telling for me. I'm telling for you because I know the pain of accepting unsuccessful result. Don't be there. With this, we will close this head of income, guys.